Hello, my name is Sally Gimmon, and I am the owner of theTrustIsYou.com and a podcast called Stop Paying Capital Gains Now, with an exclamation mark. The reason I do this is because so few people have ever heard of the Spendthrift Trust. With the Spendthrift Trust, you're going to do three things that you should know about. Number one, you're going to save federal taxes. Everybody wants to learn how to save federal taxes. Number two, you're going to keep your information 100% private. Your LLC, S Corp, or C Corp does not do this. And then number three, you're going to pay. I can't stop you from being sued, but you will pay no judgments if you get sued. That can save you thousands of dollars. Most people have never heard of the Spendthrift Trust, and it is my goal to teach them about this, and then to help them try to get. I have a nonprofit to help them be able to afford the trust. This trust is legal. It's patented. It's in the IRS Tax Code 643B, like Bravo, and it comes from England way back when King Henry VIII started the Church of England. He got in trouble for chopping off his wives' heads, so he decided to start a church. Go figure. What a weird thing to do. So when he started the Church of England, he went to go tax the lords and ladies of England. The lords and ladies of England went further back into history to the Magna Carta and said, no, King Henry VIII, you can't do this. This is contract law that came from England while we were still a colony here in the United States. The law firm I work on behalf of has just inherited a trust that's turning 350 years old in 2023, before we were the United States. Amazing things. Now, most people do not realize the IRS Tax Code only came into effect in 1913. It was supposed to be a 6-year temporary tax. We were getting ready to go into World War I, and the U.S. government was broke. Well, it's been more than 100 years now, and it's 10 times the size. If you lay Shakespeare's work all up together, Romeo and Juliet, As You Like It, Midsummer Night's Dream, King Henry III, line Shakespeare's work up, it's 10 times the size of Shakespeare's work. Shakespeare's a whole lot more interesting to read than the U.S. Tax Code. So the taxes are completely, there's so much information in there. I don't wish any ill will to CPAs or anything else. I'm a dyslexic. I transpose numbers. But the majority of CPAs work in the 300, 400 level because that's where all the tax returns are done. This is way up in 643B, like Bravo. Back in 1913, the rich families, the Rockefellers, the Carnegies, the DuPonts, and the Kennedys purposely designed the IRS tax code so they can save money. I'm going to talk about 4 trusts. The first trust is for business owners. If you are making 1099 income, any 1099 income, maybe you have a side hustle, maybe you're a realtor, maybe you have a brick and mortar store, maybe you have an Amazon store, I can legally say you're going to save 70%, at least 70% on your federal taxes. Most of my clients are saving 90 to 92% on their federal taxes. So here I am, cheat sheet. So this is a true story. This is a gentleman here in the Charlotte area who has a pizzeria. He's married. He files jointly. They make about $15,000 a month in 1099 income. So that's $180,000 a year, which is at 22% tax rate. You can look this up. You can Google tax rates, everything else. So what's going to happen is in 2023, at 70%, we're going to save him $21,150. His taxes, just so you know this, so it's true, his taxes are $30,215. We're going to save him 70%. He's ecstatic. So what's going to happen? That's 2023. In 2024, he's going to save $21,150. In 2026, he's going to save $21,150. In 2005, he's going to open a third pizzeria. And in 2006, he's going to open a 4th pizzeria. He plans to work for another 7 years. And then when he retires, he's going to leave 2 pizzerias to one son and 2 pizzerias to another son. And they're going to inherit those pizzerias with no inheritance tax because it's all within the trust. Beautiful, beautiful thing. Another person for 1099 income, my cheat sheet. This is a gentleman up in upstate New York. This is kind of interesting because he's going to save federal taxes and state taxes if he gets everything into his trust. So for the federal taxes, we're going to save him $90,012.03. On the New York State side, he's going to save 10.3% of his taxes, which is going to be we're going to save him altogether $123,165.10. These are his 2021 numbers because his 2022 taxes weren't done yet. His wife was a real estate agent at the time, but she hasn't sold anything yet, and now she's a real estate broker. So both of them, he's an affiliate marketer and she's a real estate broker. Both of them are going to save the 1099 income. So the business trust is for 1099 income earners. Again, you're going to save quite a bit of money, but I can legally say 70%, at least 70% or more. Then there's the beneficial trust. The beneficial trust is for any and all investors. I don't care if you're a passive investor, you're a real estate investor, you're a crypto investor, you're a crypto miner, you're doing stock market investing, you're doing options trading, you're a day trader, you're a forex trader, you have royalties, you have NFTs, you have mineral rights. You're going to save the following taxes year after year, generation after generation. You will no longer pay short-term capital gains. Just to give you an idea, with my short-term capital gains, so I wholesale houses and I do upset bids, I have saved over $177,000 in capital gains. So you're no longer going to pay long-term capital gains. Just to give you an idea, last month I helped a gentleman save at 15%, selling his HVAC company, $255,000. At 20%, because I'm doing my math right now, so give me 1 second, 17 times 0.2, or $340,000. That's a lot of money. He's retiring early, getting on Social Security early because he's got bursitis of the knees, and this is going to save him 6 figures into his retirement. Interest income is for people who do creative financing or do the BRRRR strategy, buy, rehab, resell, things like that. Forex investors, you get charged interest income and capital gains. You need this trust. I have notes. So the notes, I'm the mortgage, I'm the paper on the house. People pay me their mortgage. That's interest income. Or a passive investor. Maybe you're in a REIT. You're going to save interest income. Dividend income. If you have dividend stocks, you're a day trader, you're an options trader. Oh, options traders, listen to this. If it's a year or less, it's 40% on your profits. If it's a year or more, it's 60% on your taxes. You need this Spendthrift Trust. Rental income. Maybe you have short-term rental like Airbnb, traveling nurses, or you have long-term rental income. Maybe you have 10 doors, 20 doors, multifamily. You're going to save rental income. Yes, you can still do depreciation, but again, going back to no judgments if you get sued. True story. One of my clients, I think I told you this already. If I did, I'm sorry. Hey, the renter's dog got loose, bit the mailman. The mailman found 4 of his houses and made $100,000 off of each one of those houses. You don't do that anymore with the trust. And then if you have royalty income, royalties can be an actor, an actress, a playwright, a songwriter, an author. It could be somebody in the NFT world, NFT real estate, NFT crypto, NFT artwork, or it could be somebody with mineral rights. Now, a long-term capital gains, 15% or 20%. Everything else is going to be taxed at your tax bracket. I can't tell you what your tax bracket is. It is between 10% to 37%, 7 different layers. Personally, when I started the trust, I knew I was at 24%. So I use a figure for 24% for everybody just to give them an idea. My pizza man, he was at 22%. My New York guy was at 35%. So again, that's the beneficial trust is going to save investors thousands of dollars. The third trust is the charitable trust. This, I have a joint venture with somebody that if you have the nonprofit, my nonprofit is learnwithsallymarie.com, learnwithsallymarie.com, where you can learn to do about gift giving. One $10 gift and you'll make over $72,000 tax-free. Beautiful thing. I have that in a charitable trust, and with his combination, I'm going to get Google ads, $10,000 a month to advertise the page, and I don't have to pay that back. Beautiful. I'm going to get more people out of debt with a charitable trust. And then the fourth trust is going to be a senior trust. The senior trust is going to help seniors not worry about IRMA. This is a true thing that happens. IRMA is income-related monthly adjustable amount. Every October, so this coming October 2023, the IRS is going to go back and look at anybody who's on Social Security in 2021. And if you made more than $91,000, either from your Social Security, from your pensions, from your 401k withdrawals, from your SEP withdrawals, or if you have 1099 income, you have capital gains, if you have interest income, dividend income, rental income, or anything else, you're going to save all this money. So all 4 trusts are going to file a 1041 tax return. So it won't matter if you are making more than $91,000 as a senior citizen. This didn't come up much when I was a Medicare broker, but there are some senior citizens out there who are doing quite a bit in income. Again, all this information is available at thetrustisyou.com. I'm here on TikTok. You can always send me a question on TikTok. I'm here to help you on that. But I want to help as many Americans as possible save as much money on the federal taxes, just like the rich do. If the rich can do this, why can't we do this? Today is Monday at 8 p.m. East Coast time. I'm going to do a live Q&A. So the Trust is You /Q&A, and I'll take questions then. But please, if you have any questions, make an appointment with me. But you can do this at thetrustisyou.com. My podcast is Stop Paying Capital Gains, and I hope I can help you save as much as you can right now. Thank you for watching. I hope you have a beautiful day. Take care. Bye-bye.